Brilliant. I think we'll get going just because it's 10:02 now. If you have just joined us, welcome. My name is Laura Hodgkins. I'm the event and training team leader at Staffordshire Chamber of Commerce. Today we're having a webinar on what does the global shutdown mean for businesses using foreign exchange facilities with Andy Medler, and he's part of the moneycorp group. So we're just going to let you know that we cannot see or hear you today, so you can communicate with us via the chat function at the bottom and the QEA as well. For those of you that are attending today, can I just check that you can all use the chat? So if you could just give me a quick hello in the chat box today, that would be fantastic, just so I know that you're all there. Fantastic. Got a couple of hellos. That's good. Brilliant. Fantastic. Just checking that the chat function works today. So brilliant. Thank you very much. Brilliant. Okay. That's all I need to say for today. So with everything all said and done, Andy, if you'd like to go back on the screen, fantastic.
Laura.
Just stop sharing my screen for you, just so you can share yours, and whenever you're ready.
Thank you. Good morning, Laura. Can you hear me okay, Laura, from your side of things?
Perfect, Andy. That's great.
Thanks. Good morning, everyone. My name's Andy Medler. I'm the Senior Account Manager for moneycorp. We deliver the Chamber Foreign Exchange for the British Chamber of Commerce. As Laura said, today's seminar or webinar is around help for businesses with international interests during the global shutdown. For those businesses who are on the call today and may not already be Chamber members, I just thought it'd be important that we kind of cover off a little bit of information in regard to who moneycorp are. So we've been around since 1979. It makes us one of the UK's oldest and longest established non-bank FX providers. We traded over 14,000 corporate clients last year and over 35 billion of currency, to kind of give you an idea of the size of the business that we are. And we did just shy of 6 million payments. We are the preferred partner for the British Chamber of Commerce. So if you are a Chamber member, you will see what it says Chamber Foreign Exchange. That is moneycorp. So that is a big thing for us as a business, because a lot of businesses don't know who they should be working with, who do they trust. The fact that we are the accredited provider by the British Chamber of Commerce will give you peace of mind that we're the right company to work with. We also work with lots of large organisations across the UK, Institute of Chartered Accountants England and Wales, the Telegraph, City AM, Everton Football Club, and many, many other organisations. All client funds are held in what we call client safeguarded accounts, which means they're segregated in bank accounts and not combined with our own funds. In regards to moneycorp, we are a UK-based company with our head office in London. We have regional offices across the UK. We have one in Coventry, one in Leeds, and one in Edinburgh, and then obviously offices across the globe, as well as pictured on the map in front. The fundamentals of moneycorp is very, very simple. We're here to save companies money on the cost of their foreign exchange and payments, giving expert guidance on hedging and risk strategy, with ongoing support from a dedicated account manager. And what we mean by that is I'm an account manager, but every single client will also get a dedicated dealer in our dealing desk in our London office. So what has affected the markets in regards to the COVID effect? So unless we've all been asleep for the last 6 weeks, we're clearly aware of what COVID has had effect on a global basis, on personal issues from a work perspective through to corporate, and obviously wider afield from a global perspective. A few notes to kind of go through to really see the effect of COVID. World trade is expected to fall between 13 and 32% in 2020 as the pandemic continues to disrupt normal economic activity and life around the world. Nearly all regions will suffer double-digit declines in trade volumes in 2020, with exports from North America and Asia hit the hardest. This quarter saw the most brutal global collapse since the Great Depression, and that was exacerbated by a 60% oil slump. The estimates for the year impact on UK GDP range between -4% to -8%, versus what was originally a projected 1% growth for 2020 before the COVID-19 pandemic. So clearly, from a UK perspective, you can see that alone from our gross domestic product scenario of how much the UK has been hit. The OBR, the Office of Budget Responsibility, published an illustrative scenario suggesting a larger fall of 13% in GDP in 2020. But the IMF forecast for the UK was a decline of around 6.5%. Estimated that the budget deficit could rise to around 8% to 12% of GDP in 2021, compared to 10% in 2009 after the global financial crisis. So it's clearly evident that the economic effect will be felt harder than what it was in regards to the big financial crash in the late noughties. The worst hit sectors will be such as transport, hotels and food service. We could see that annual output in 2020 down by anything from 15 to 40%. Fiscal policy set up by the government and the Chancellor to the UK will do whatever it takes to support the economy. I think it's clearly evident that the government is trying to do everything they can to support not only individuals but businesses as well. So far, 140,000 companies have applied for the furlough scheme, affecting nearly 9 million workers, with the cost expected to rise to £42 billion. This is all part of an immediate fiscal impulse package of £100.5 billion to support the UK economy. And on top of that, there's been £200 billion of quantitative easing announced as part of the Bank of England's emergency measures. The independent fiscal watchdog estimate the budget deficit could soar to £273 billion in 2020 to 2021, which is the largest single deficit since the World War II. Since the Second World War. So as we can see, there's some kind of key points on there, and that really shows the impact that COVID has had on the markets. So how have the markets reacted in regards to COVID-19? The next three slides they look similar, but they're all slightly different. So the first one is sterling against dollar, the next one is sterling against euro, and the final slide is dollar against euro. On the left-hand side, we have the last 12 months movements, and on the right-hand side, we have the last 4 weeks. So when we look at sterling against dollar, over the last 12 months, we have seen sterling dollar move 15.2%. Yet over the last 4 weeks, we have seen a movement of 12.5%. So again, that really kind of clarifies just the volatility that we have seen over the last 4 weeks against the last 12 months. Sterling euro, the same scenario, a 12.6% move over the last 12 months and an 8.5% movement over the last 4 weeks. And finally, euro against dollar, 7.5% movement over the last 12 months, and over the last 4 weeks, a movement of 6.3%. So slides are great, make good visual aids, but what is the true cost to a business? If we look at a business who would have imported $500,000 of goods over the last 4 weeks, we have seen a market high of $1.3066 and a market low of $1.1435. That's a sterling increase of £54,500 over a 4-week period. So that just shows, it's all well and good saying, what does 130 mean or what does 114 mean? When we put it back into a pound notage value, £54,000 variance over a 4-week period is a huge amount for any business to have had to have contended with. And for some companies, it means they would theoretically have to close their doors because they just couldn't have afforded that kind of market movements. And again, the bottom bit, using the same equation but based on euros, a market high of 115.05, a market low of 105, that's a cost increase of £40,000 or 8.5%. There is one caveat on this. Obviously, this is based on a client importing. For exporters, for those who have still been able to export, obviously they've been able to benefit by the devaluation of sterling, which means if they hadn't kind of got any hedging in place, they would have actually increased their sterling return. But at the same time, it's been a very, very difficult place to export products out of the UK due to obviously the shutdown around transport links on a global basis. So in regards to buying currency, there are various ways that a client can purchase currency through MoneyCorp. There's spot, forward, market order, and options. I'm going to touch on the first three today. I'm leaving options out of the scenario purely because they are what we would call a regulated product. Now, I'm not a regulated individual, but for any client who wants to trade an option, or it's also known as a derivative, just be aware that we do them. So what is a spot contract? This is where I'm going to cover over the next couple of slides as to how a client can trade with MoneyCorp in the FX marketplace as well, and what effect different products can have as a business. So if we use the example of what we've seen previously, a business importing 500,000 of goods over the last 4 weeks, let's say we've seen a high of 130.66 and a market low of 114.35. A spot contract means you trade at the rate on the day. So if we use the example of either $1.20 or $1.17, this gives you zero protection against market movements. Sometimes you will win, sometimes you will lose on the market. The question that has to be asked is, can you afford to risk losing money on orders or contracts by gambling on the live market rate? When you look at trading through someone like MoneyCorp, we have an online platform that gives true live rates. The markets move every couple of seconds. When you compare that against some banks, they give a daily rate. So you might just get one rate for the day. That's not a true comparison to where the markets are at, because they say the markets do move every couple of seconds. So we're able to give that facility so you can see how markets do move. What is a forward contract? Very simply, a forward contract is a way of locking in the rate today until a date in the future, so you know exactly what your cost to the business will be. A simple comparison to this would be a fixed rate mortgage. As consumers, we want to fix our mortgage costs against an increase in interest rates. So why, as a business, would we not want to look to do the same thing for purchases or sales? So let's look at as an example of forward contracts. So again, if we use the scenario over the last 4 weeks, we've seen a market high of 130.66. We've seen a market low of 114.35. If the rate had been fixed at 130.66 4 weeks ago, no money would have been lost as a result of the market movements over the same period of time. Forward contracts are about ensuring you do not lose money on your agreed prices with customers and or suppliers. We can, from a MoneyCorp perspective, we're able to facilitate forward lines potentially up to 36 months in advance. When we look at a lot of the UK banks currently, they'll only offer forward contracts of 9 to 12 months in advance. The fact that we're able to give facility of up to 36 months, that can add a lot of value to clients. So I've got a client, as an example, they've won a contract in Indonesia for a 24-month contract term. So what good is a 12-month contract through their current bank when they've got a contract where they need to fix the cost for 2 years? So by coming through MoneyCorp, they've been able to lock in those rates for up to 24 months in advance and know their profit and return, which is the most important thing. What is a market order? A market order is a simple way of targeting a specific rate in the currency markets. So, for example, today's rate for sterling euro might be 114. As a business, you know you need to make a payment for 45,000 euros by the end of May. You could place an order in the market at €1.15. What that means is if the market hits €1.15 at any time between now and the end of May, we will execute the deal for you. If the market does not hit 115, you would trade at spot. And this comes back to what we were saying earlier. The spot market gives you no guarantee, no protection against adverse market movements. So the rate might be 114 today, but if by the end of May it's at 112.50, you would trade at 112.50 because it hasn't hit the 115 mark. A stop loss or a lower level can be entered into the market as well. So let's say €1.10. If the market dropped to 108, now bear in mind recently we've seen €1 104.50, you would have purchased at 108 or 110 as the markets fell. So you wouldn't have to be buying at 108 or 105 because you've put the lower level protection as the market falls. We execute that deal for you. It's a really good way of saying, right, I need to buy some currency, but I want to achieve this rate, or I don't want to buy below this rate. The good thing with a market order is we facilitate the markets 24 hours a day. So a lot of these orders can often hit in the middle of the night because you get a spike in the market movements when most normal people in the UK are fast asleep. So what that means is when you come back into the office the following morning, you would have received an email because there's been a spike in the market to say, right, we hit 115, your deal's been closed out for you. Please send us the sterling and we'll send the euros out for you. So mechanics of trade and the benefits of using a company like MoneyCorp. So typically, corporate companies will bank with one UK banking partner. So the example we've used here is Barclays Bank, and Barclays are one of the banks that we work with as well. By only having one banking provider, you're limited by that bank's buying power because you're only buying it from one individual bank, and you are one entity looking to buy one lot of currency. The more you trade, the better the rate technically you should get from the bank. By trading through someone like MoneyCorp, there's 8 examples on here, but we have 17 banks or liquidity providers that we work with. So what that means in reality, it would be like having 17 different banks set up for you as a business to be able to achieve the best rate. So when you look to purchase currency or sell currency through us, you enter onto the online platform and speak with the dealer on the phone. In the back office side of things, the rates go out to all of our liquidity providers. Whoever's giving us the best rate at the time, we would buy it from them. So be it Nomura, be it Deutsche, be it JP Morgan, and we will then pass that on to you as the end user. It gives us much bigger buying power. And from your perspective as a client, so it gives you, access to 17 liquidity markets, which is a great way of doing business. We are living through an uncertain time, and the global pandemic is having a major impact on the global economy. There are hedging solutions available to protect your bottom line. One of the things around hedging that is worth thinking about is the fact that markets, although they're not as volatile, we're going to go through a very, very uncertain period as we move forward. So it is worth looking at all of your costs. Are you paying too much for your FX payments? Many banks will charge for international transactions. They will charge for currency accounts. As a chamber member, we will give those transaction fee free to you as a client. So free rate comparisons and an FX audit are also available if you wanted to assess, are you getting a good deal on your current costs and your FX spend? And we can look at that for you as a chamber member. Any questions, Laura? Back over to you.
Fantastic, Andy. Thank you very much. Bear with me. My video is just taking a while to load up. There we go. Fantastic. Sorry about that. My video is just taking a bit of time. Brilliant, Andy. Thank you ever so much for that. So we're open and welcome to questions now. So if anybody's got any questions for the Q&A or the chat function just at the bottom that I talked about before we started today, we're quite happy to take some questions now. I'll give you a couple of minutes just to get those up and running. So we have just had one question come in, Andy. So what is the cost in regards to forwards to the business? So what money terms is there in for the business?
Okay, thanks, Laura. Yeah, in regards to forward contracts, so I mean, obviously, like with anything, there can often be a cost to any business around looking to protect. When you're only looking at a hedging scenario. with a forward contract, the best case scenario, or sorry, let's start the other way. Worst case scenario, it would be a 10% deposit. So let's try and keep the math simple. If a client was looking to book £1 million worth of currency over a 12-month period, the worst case scenario, we'd be looking to give a 5% deposit on that. So what that means is the corporate entity, the business, would pay £50,000, but that would secure that million over a 12-month scenario. Best case, and this is how it works with, so you open your accounts, our credit team will look at the accounts for the business, look at the profitability, the balance sheets, etc. Best case scenario, it's 0% deposit. So what that means is, as a business, you could book £1 million worth of currency at zero cost, and you only pay for the funds as you need it. So if you're buying £1 million worth of dollars, for argument's sake, it's zero cost today. If you need to do your first payment in July for $100,000, you would send the sterling for that $100,000 in July. If you then didn't need anything until September, you then pay the next chunk in September, so on and so on and so on. With regards to the deposit, if a client does pay a deposit, the deposit is refunded on a pro rata basis as well. So if they were doing equal amounts over the 12 months, if it's £50,000 deposit, roughly £4,000 a month would be refunded off that deposit amount. So I hope that's answered that question.
Brilliant, fantastic. Let's just see if we've got any other questions. So has anybody else got any more questions for Andy? I'll just give you a minute or so just to pop them in the Q&A or the chat function at the bottom. Your presentation was so good, Andy. It doesn't look like we've got any more questions, so we'll just wait a couple more seconds. Hang on a sec. So we've just got one more question just come through. As a corporate business, have we missed the boat as volatility will be less as we move forward?
No, not at all, really. I mean, obviously, yes, we have seen a huge swing over the last 4 weeks around the volatility in the marketplace. I think what is very, very evident as we come out of this pandemic and we start to get back to whatever the new normal may look like, is the fact that I think it's clear to everyone that cash is going to be tight, not only for individuals, but obviously for corporate entities, because there's been very lack of trading over the last couple of months. Cash reserves would have been used up paying wages or topping up from furlough, etc. What that means in reality from an international payments perspective is, for any client who is trading internationally, cash will be key to this. So although volatility will have we'd like to think won't necessarily be such a big a bounce as we've seen, securing the cost of the currency is even more vital. So, a client might win a contract that's 35,000 euros over the next 30 days, for argument's sake, where traditionally they would say, well, it's only a 30-day period, I'll run it on the spot basis. Well, you could still get that volatility. As a business, you want to know, right, it's 35,000 euros, let's keep the math simple, it's a 30,000 sterling cost, not a 31 or 30,500 pound cost due to a little market movement. So I think it'll be even more prevalent for businesses using hedging products in regards to ensuring that cash is protected in every single way. You won't necessarily see longer hedges, so like a 12-month for argument's sake. I think we will probably see more and more scenarios of people saying, right, I've got this contract for the next 30 days, I've got this contract for 60 days, and they'll, rather than having 100,000 contract, there might be 10 at 10,000 to match every single deal.
Yeah, absolutely. Yeah. You've got two more questions, Andy. So the first one is, we are charged transaction fees by our bank. Do moneycorp charge fees?
Standard answer is yes, but for chamber members, no. So again, the beauty of that is, on average, most banks will charge anywhere between £15 to £20 for a transaction fee. moneycorp's standard fee is £9 for a transaction fee, so that's cheaper anyway. as a chamber member, we've, part of the offering of the Chamber Foreign Exchange scenario is the fact that we remove those fees completely.
Wow, that's brilliant. Just another question for you, Andy. How long do you think the markets will take to go back to pre-COVID-19? That's such a hard question. See if you can answer that one.
Very, very hard kind of question to answer on that one. There was a very, very interesting webinar earlier this week, and I don't know if any of the attendees were on the, there's a webinar by Adam Marshall, who's the Director General for the British Chamber of Commerce, and there was an economist by the name of Vicky Price, and this subject was brought up. So they were saying, when will the markets return? There's lots of different scenarios. Is it a V-shaped drop where we've seen a massive drop and it will spike back up automatically? Is it a U-shape where there's a slow retraction and a slow retraction back up? Or will it be an L-shape where we've seen a massive bomb and it'll be flat for months ahead? Or is it a W, a bit up and down as we go ahead over the coming months? I think the general feel is that as we come out of this market, this scenario, the markets, I think, are expected to recover maybe slightly quicker than, say, after the crash back in 2008, because as massive effect as the financial crash was, that was a financial crash. This is a closure of the economy due to a pandemic. So to a certain degree, it's almost like businesses have gone in hibernation. So as we come out of this period, businesses will come out of that hibernation. And I think the theory that a lot of economists, I'm not an economist, are saying is that businesses should almost kind of start to recover relatively, quickly at a decent kind of turn. What does that mean from a sterling perspective? Let's also not forget we've still got the scenario of Brexit. So there's lots of things ahead. So I mean, values of 130, 125 to 130. Would that be a good range by the end of the year? Possibly. But it's an unknown quantity. While let's face it, no one knows where we're going to be next week, let alone 12 weeks, 12 months down the line currently in regards to COVID, because we still don't know the impact and when the economy will start to come back to whatever the new normal might look like. And just one note in regards to the Adam Marshall webinar, there is a link on the moneycorp YouTube channel. So for anyone who does want to look into that and listen to it, it is different aspects how I've spoken today, where I've broken down kind of the barriers around foreign exchange and how easy these products are. The Adam Marshall, so he's the Director General for the British Chamber of Commerce. He gives a very, very in-depth insight to what the future may well look like.
Brilliant, Andy. Thank you very much. Well, I think we've answered all of the questions. Just checking the Q&A, just make sure there's no other questions. Brilliant, fantastic. I think that's all the questions for today, Andy. Oh, he says. See any more? Nope, I think that's it. Fantastic. Andy, thank you so much today for your presentation. Really appreciate it. For those of you that don't know, we will be, Andy's presentation will be on our webinar library on Staffordshire Chamber's website. So if you do want to look at it again, we will be able to, you'll be able to see that as of Monday morning. For those of you that do want the slides today from Andy, I'm sure Andy will be able to help, and any details that you want from Andy as well, we will be able to send those out to you as well. But from me, that's all from today. And Andy, just want to thank you again, and we hopefully look forward to seeing you very soon.
Thank you, Laura.
Bye.